Hey, hey, hey.
Hey,
Satch,
Saj.
how are you?
Good and you, Steve?
Good, good.
Nice seeing you, man. All
Likewise.
right. Um, we're just gonna give it a minute or two to let other people uh jump in. Dude, I have a friend whose name is Robert Maldonado. And it always, I don't know why you guys is whenever I see your like name just written, I always think it's him. For some reason I get confused, Robert and Steve, you know. Well, I guess that same last name, is what makes it confusing. But um,
Oh, I get it. There's a lot of us out there floating around.
a lot of Maldonados.
Yeah, actually, even there's four Steves. So my grandfather's a Steve, my dad's a Steve, I'm a Steve, and my son is Steve. So even a lot
Wow.
of Steve
Yeah,
Maldonados.
yeah, that's awesome. We got Dominique, Dan. How are you guys doing?
Hi,
How you doing?
enjoying the day off.
I love it. We had quite a few pilots that signed up, but probably won't be able to make it. They're just gonna get the recording afterwards. Dominique, I'm assuming you're with American, right? I see your photo there.
Yes, that's correct. I'm based in Charlotte.
Okay, cool. Uh, and then where are you now?
I'm at IBM currently and waiting for a start date at American.
Okay, yeah, you did tell me about that. We talked about that a couple days ago. Now, so you guys, you got Dan coming to your team, Dominic there.
Welcome, welcome.
Thank you. Yeah, I'm looking forward to it. I'm just I've had the CJO for about a month, maybe 2 months now, just waiting on a school date. I'm surprised it takes this long to get a class date.
They're actually running a little bit behind from what I hear, but that's why there's a pause for the winter time for them to get caught up. So
Okay.
should be on campus soon.
All right, good stuff.
Um,
Dan, Dominique, it's nice to meet you. I am not a pilot, um, nor do I have a desire to be. As great as it seems, there's too many buttons for me.
Well, thanks for doing this.
yeah,
Yeah,
and we have somebody else joining on WhatsApp, I think is what it is, or phone call. Not sure if you're able to speak there, or you may be just listening in, but it's all right. And we'll kick it off. And mostly just because of the nature of the job, Steve, right? Like a lot of the people that are going to listen to this or see these are pilots. So I kind of want to tailor it to the pilot community. And also because of that reason, many of them couldn't join because schedules are crazy, right? So they all were texting me and telling me that some of them were going to be in Paris, all over Rome, all over the world, right? So they'll get the recording. So, but I just want them to know that this is going to be tailored for them. So, do you have like a typical outline of when you jump on a webinar that you discuss on best practices and things to do with IRAs? I know I have a couple of questions that I want to ask you that I think will help a lot of our community, but I'll want to let you do your thing first, and then we can probably jump on some Q&A.
yeah. I was gonna say, if you don't mind indulging me in a story, I'd love to tell you a little bit about my IRA journey, kind of what we do at New View Trust, and then yeah, I'd be happy to answer some questions.
Yeah, awesome. Kick it
Well,
off,
guys,
Steve.
again, great, great. Well, Satch, thank you again for having me. It's a pleasure to be talking to your audience about what we do and how we help people maximize their retirement savings potential through what we call self-directed retirement accounts. Dan, Dominique, again, it's nice to meet you guys and hope you're doing well where you're at. I am here in Orlando, Florida. That's where we are based, New View Trust Company. We're an IRA custodian. We've been working for the last 20 years to help our clients retire better by using their retirement funds to invest in alternative assets. So that's real estate, cryptocurrencies, precious metals, private placements. But primarily my team focuses on real estate, and more specifically real estate syndications and commercial real estate. So multifamily, self-storage, etc. It's a great place to utilize these retirement funds to help maximize your retirement savings potential, and something that I've got a passion for myself. But and I do apologize. I am fighting a sickness, so if I go in and out coughing, please bear with me. But yeah, like I mentioned, I mean, I'd love to just tell you a little bit about, kind of how I got started in this space, as it's a bit of an unconventional journey. I'm young, I'm 27 years old, and about 6 years ago, I had a transformative experience that was the birth of my son. I'm a single dad, and that uncertainty brought about a lot of curiosity. I had to figure out a lot of things, of course. I was just at the cusp of starting my career, and it was a pretty beautiful but daunting moment where I was trying to figure out how I can provide the best life for myself and my son. And we were living at home, not living at home, living in a home close to my college campus, actually with a few roommates of mine, in a home that's more suited for college students rather than a growing family. And so there was, not only a necessity, but a desire, but a necessity to go out and find, more stable, clean, and affordable housing, right? So I went out, took my family around, and we started looking for, a new place to live. I got connected with a gentleman at my church who had a place available. Long story short, he's a retired Wall Street professional. We were sitting there in the living room of his condo that he was, potentially going to rent to us. And he went on to explain that, I wouldn't write my rent checks out to him, but instead out to this IRA custodian called Newview Trust. Well, I have a background in finance. I went to the University of Central Florida to study finance. And so naturally, I'm curious. So I started asking him a bunch of questions about how this worked. And, that kind of piqued my curiosity, really sparked a flame of, curiosity and ambition, leading me to delve deeper into the world of self-direction and, alternative assets. And now here, 6 years later, I've not only got a portfolio to be proud of, but also have the privilege of working for the IRA custodian whom I used to write those rent checks to. So it can be a pretty transformative experience, and a tool that's pretty underutilized, but very, very powerful in your retirement journey. So I don't really want to talk too much about the technicalities of self-directed IRAs, but more so focus on how they can be, a beacon of hope and a tool for change. These IRA accounts allow you to invest in really what providing you with the ability to diversify outside of the stock market, potentially into tangible assets. Like I mentioned, real estate. Real estate's, our primary focus here at Newview Trust over the last 20 years in business. That's what most of our investors invest in. And like I said, most of the investors that I work with are investing into the multifamily syndications, and other forms of those passive investments. So I do have a slide. I just want to show you guys a couple things as we talk a little bit more about the IRAs themselves. So bear with me just a second. Can everybody see my screen?
Yes.
Yeah, looks good.
So, before we talk any further about the self-directed IRA itself, I do want you to understand that we are not financial professionals in the sense that we are not financial planners, we're not CPAs or attorneys. So please don't constitute anything that we say as financial advice. It's more of we're sharing our journey, our experiences with you, and what we've learned over the 20 years in business, and custodying over $2.5 billion of assets for our clients. So, Dominique, Dan, do you guys have IRAs right now? Dan, it sounds like you're maybe making a transition to a new job. Maybe you'll be rolling over a 401k in the future.
Yeah, that's my plan, is to roll my 401k into an IRA and take a portion of that, make it self-directed, and hopefully get on something with Satch here.
Okay, great. Dominique, does that sound like a similar situation for you?
Yes, I have an IRA and a 401 as well.
Okay. And now traditionally, when you think about your IRA, what comes to mind as far as investments, what you're making as far as investments?
As far as me, I mean, I'm learning. For me, try to increase my knowledge in regards to the Roth IRA. I have set up a custodial IRA for my children as well, but I'm in the learning process, so that's why I'm here.
Okay. Yeah, no, that's great. And you know, everybody starts at different places, and you know, IRAs, or sorry, self-directed IRAs are great at that. It's not about you know, having a fortune to begin, but having the wisdom to, you know, grow what you have into something more, right? And it's a great way that levels the playing field, allowing you to tap into this capital that has otherwise just been sitting there, maybe you know, underperforming or not doing anything at all for you. But anyway, yeah, so when we typically think about these accounts, we think about stocks, bonds, mutual funds, right? Like traditional investments. And as I mentioned before, we are a custodian of alternative assets. So when I say alternative assets, I'm talking about anything that's non-publicly traded. So this is anything off of the stock market. So this could be real estate, whether that's into a syndication, whether that's a build to rent, a fix to flip, tax liens, private lending, whatever the case may be. We also do cryptocurrency, precious metals like gold and silver, other forms of private equity for business startups. Just an example of, you know, the alternative asset space. It's a lot easier to tell you what you can't invest in with a self-directed IRA than what you can invest in. And there's really only two things that the IRS prohibits you from investing in with these types of accounts, and that is collectibles, so like artwork, sports cards, and then life insurance. So people invest in life insurance policies. You cannot buy life insurance policies with your IRA, but everything else is fair game. And so it makes it a pretty powerful vehicle, and something super exciting for investors as they can now tap into these resources that they've otherwise been contributing to, i.e. the 401k that Dan will be rolling over, and Dominique, the IRA that you've been contributing to and likely investing in the stock market. So, you know, whether you are a pilot or you know, any other professional that's been contributing to these accounts, I would really implore you to look into, you know, what opportunities exist, and a custodian like NewView Trust can kind of help guide you on what that looks like, and how we can help with your specific strategy. So a self-directed IRA, or self-direction, is really just a marketing term. It describes the account holder's ability to direct all of the account activity within their account. Now, you have the ability to do this with Charles Schwab, Fidelity, or any of the other brokers, but you're limited to whatever menu of options they give you. And typically those options, again, are limited to the stocks, bonds, and mutual funds that we talked about. So with NewView Trust, you unlock the choices, and give yourself the ability, put yourself in the driver's seat to take control of your investment journey. So rather than letting somebody else just give you a menu of options, or in some case, even entrusting that responsibility to a financial advisor, you're actually taking control of that journey yourself, making your own decisions, and investing it into potentially much more lucrative projects that hedge against the volatility of the stock market. So self-directed IRA is just like any other IRA. It comes with all the same tax advantages, either deferring taxes or keeping the taxes tax-free. And that really depends on how you set up the account. And at NewView, we custody really three main types of accounts. So those are going to be your personal plans, then your employer plans, and then specialty plans. And you can see the matrix on the screen here. We won't get too granular. We'll kind of talk about some of the plans and some of the individual benefits of each here in just a second. So most typically people, you know, like Dan, are rolling their money over from a 401k that they've contributed to with an employer, or they have an IRA that they've been contributing to with their broker. So typically many people have what they call a personal plan. So this is your either traditional or Roth IRA, right? Those IRAs are very similar in the sense that they are both tax advantage vehicles that are set up to help you save for your retirement. Now, it's really an investment decision and a matter of strategy and philosophy when it comes down to what account is right for you. Now, depending on the account that you already have set up, this may determine what type of account you would open up with NewView Trust. Depending on your specific strategy, there is a way to convert traditional dollars into Roth dollars. But again, we're not going to get too granular or too specific on this webinar. We want to keep it a little bit more high level. So anyway, there are two types of personal plans, the Roth IRA and the traditional IRA. Roth IRAs are contributed to with post-tax dollars, meaning that you've already paid the taxes on the money going into the account, and any capital gains received inside the account are also tax-free. A traditional account is contributed to with pre-tax dollars, meaning that you haven't paid the taxes yet, and when you do take distributions from the account, you will be responsible for paying those taxes. Capital gains received in the account are also tax deferred, and you will pay taxes on those gains once the once you start taking distributions out in retirement age. So again, I would implore you to talk to your financial advisor, whoever, gives you, guidance as far as your financial strategy to determine what is the best for you. And like I said, this decision may already be made because you guys already have accounts that are set up, and depending on how they've been taxed already, then that would be the account that you set up. And again, we can talk about specifics after the webinar if you'd like, and I'll give you my contact information so we can keep the conversation going. And then we have employer plans. So this is a pretty powerful, tool here. And I know that you guys are pilots, so you're working for somebody else. So we won't dive too much into it, but I know people have side businesses. And so I do want to highlight this here because it is an important part of our business. So we custody employer plans for those individuals that are business owners, whether they have employees or not. We custody these special plans that allow them to contribute a little bit more than the traditional or Roth IRAs that we just talked about. So if I go back here, you can see that the contribution limits for a traditional and Roth IRA are $6,500 a year with an additional $1,000 a year catch-up contribution after the age of 50. Now, those are going up by, I think, $500 each here in 2024. So it's going to go up to $7,000 a year for your standard contribution, and then $8,000 a year if you are over the age of 50. But if you notice in these employer plans, you have much higher contribution limits. So like with the simple, it's 15,000, with the solo, it's 66,000, with the SEP, it's 66,000. So the advantage here is that you're a business owner, you're being incentivized by the government because you are perceived to be contributing more to the economy, and thus you are able to contribute a larger sum of your business income to these types of vehicles. It allows you to make larger investments, allows you to grow your wealth a little bit quicker, and you'll also reduce your taxable burden while doing so. So these are really for small business owners, but if any of that applies to either Dominique or Dan, and you guys have a business outside of what you do with your W-2, like many of the people that we work with, then maybe these accounts are something to explore. So again, happy to talk through any specific situation after the webinar. And then many people don't know, but it's a pretty cool thing, that you can actually invest your HSA and your ESA into the same investments that your IRA makes. So let's say you have $10,000 sitting in an ESA and you want to put it into a real estate project. Well, you can do that, and you can grow it until the time when it's ready to be used. And I think that that's such a cool addition, right? So many people have those accounts. Many people know their benefits, but many people don't know that the money can actually be invested and grow while it's sitting in those accounts. And so just wanted to highlight that, as I think it's super important. We do custody those specialty accounts, so the HSAs and ESAs. And it's a great way to grow that wealth alongside your IRAs. And we won't talk too much in depth about restrictions and things like that, but I do want to highlight that there really are two main considerations when using an IRA to make investments, and that would be disqualified parties and prohibited transactions. Disqualified parties are, of course, those people that you are unable to invest with using your IRA. Those are typically family members or people that have a very close interest in the business that you're investing in. So it's primarily family members. If you think about your family tree, the trunk of the tree is made up of your parents, your grandparents, your children, your grandchildren. The IRS calls those your lineal ascendants and your lineal descendants. You are prohibited from investing with your lineal ascendants and descendants. So anybody on the trunk of the tree, again, your parents, your grandparents, your children, your grandchildren, those are what we call disqualified parties. So just to give you an example, I own a rental here in Orlando. It's about 10 minutes away from where I live. It'd be a great spot to put my parents in, anyway, long story short, if I wanted to rent that out to them and I owned it in my IRA, I couldn't do it because they are my lineal ascendants, and thus they are disqualified parties. Let's say my son goes to college eventually and I want to purchase a home, buy the college with my IRA, put him in the room and rent the rest of the rooms out to his friends. Well, I can rent the rooms out to his friends, but I could not put him in the house because he is my lineal descendant. So that's a very basic understanding of the disqualified parties. And again, I'll send you some things after the webinar that'll help you understand more specifically who's disqualified. But the general concept is that there are people that you are unable to invest with. And there's a number of reasons for that. Again, we won't get too granular. I want to leave some time for us to have some open discussion and answer any questions that you may have. But yeah, the primary thing to remember is lineal ascendants and descendants. So if you think about the branches of the tree, so like brothers, uncles, sisters, cousins, those guys are fine. But your lineal ascendants and descendants are disqualified.
That's interesting.
Yeah, and now that holds true for businesses as well. Depending on your ownership amount in the business, how you operate within the business, and a number of other considerations, you may also be disqualified from putting your IRA money into your own business, your own deals, or even people that are closely associated with that deal. So again, we won't get too granular on that because it can get a little bit confusing, but I'll make sure to send you the information. And if anybody wants to have some deeper discussion about it, we can definitely do that. So like I mentioned, in addition to disqualified parties, there's also the transaction restrictions, right? So we talked a little bit about that at the beginning. It's a lot easier to tell you what you can't invest in than list all the things that you can invest in. So those two things that we talked about, you cannot invest in collectibles. So that is, sports cards, artwork, things that you can collect. And the primary reason for that is that because, obtaining a fair market value for those items is subjective and often hard to do. It can be time consuming, and the IRS requires you to state the fair market value of each asset in your account at least once a year. And so the IRS just didn't want the trouble of having to fight with people who think that their Michael Jordan card is worth $1 million and the other guy thinks it's worth $1. And so anyway, long story short, you cannot invest in collectibles. And then you cannot invest into life insurance policies because it contradicts saving for your retirement and a number of other considerations that the IRS had. But those are pretty much the only two things that you can't invest in. So again, when using these accounts, two considerations: disqualified parties and prohibited transactions. And if you want to learn a little bit more about those, then we can talk about them. And again, we're not going to go slide by slide here. I do want to leave some time to answer questions. These are some of the things that we talked about. You can invest into anything that your heart desires, from cryptocurrency to precious metals like gold and silver. Like I said, my heart's in real estate. Now Satch is right there with me. I've got 90 to 95% of my portfolio in real estate, from the passive deals that I'm in the various syndications to my single family rental portfolio. So there's a variety of investment options within the realm of real estate that can be taken advantage of within a self-directed account. And yeah, again, we won't highlight each of those. I do want to highlight the process real quick, because I'm sure everybody has questions about that. What does the process look like? Is it hard? I might have heard, oh, it's complicated. Well, it's 2023 going into 2024, and I'll tell you, it's never been easier. Everything is digitized. We do our best to streamline everything and make this investment vehicle as accessible as possible. So the first step is to hook up with a custodian like us at NewView Trust. We'll get your account set up using our application and paperwork. Once the account is set up, the next step is to fund the account. So either rolling those funds over from a pre-existing 401k or transferring the funds over from your existing IRA. Once the account is funded, then it's up to you, of course, to identify your investment and let us know how you want to direct those funds. So if it's a deal with Satch, you tell us, hey, Steve, I've got, X number of dollars in my IRA account and need to move them from Schwab over to you at NewView. And what we would do is we'd open up an account. Our transfer department would request the funds from Schwab. We'd get the funds into NewView, and then our specialized private equity team would help you complete that investment with Satch. So it's pretty easy 3-step process of setting up the account, getting the account funded, and then ultimately getting those funds out into the investment. And so again, happy to answer any questions as it pertains to the specifics, but overall, it's a very, very easy process. I'll leave this up as we talk and we have some discussion. I would encourage you to scan the QR code. It'll take you to a landing page where you can learn a little bit more about NewView and what we do, and also provide a link for you to set up some time to talk to either myself or a member of my team about how we can help you use the self-directed IRA to maximize your retirement potential.
I will
Anyway.
start. Yeah, I'll start us off, Steve, with a question. Can we talk about taxes and considering taking into consideration that we know you're not our CPA or financial advisor, right? But there is certain taxes that will be associated with using an IRA if the property in which you are investing is using debt. Is that correct? How can we talk about, how can we best break it down?
Yeah, that's correct. And honestly, I don't like getting too hung up on it because it's a pretty nominal tax at the end of the day. Again, we're not CPAs or attorneys, so I would really encourage you to talk to those people because while that couldn't there's ways that people can avoid it. I mean, I've seen several strategies where people, so anyway, let me back up and slow down. The taxes that Satch is referring to are what we call UDFI and UBIT. That is the unrelated debt finance income tax and then the unrelated business income tax. Essentially, it's a tax that you pay for having your money associated with what they call an unrelated business. So you're a passive investor in this active business. Your money is in this unrelated business, as the IRS determines. You then have to pay some form of taxes on the money that is either leveraged by that business or contributed to the business and paid for on the gains of the business income. So it gets a little complicated. And so I don't like to talk about it too much. The point is that it's a pretty nominal tax. And yes, while it will come up, there are some things that you can do to avoid it. I mean, one of the things that's pretty easy and low hanging fruit, if you qualify for it, a solo 401k, again, is for a small business owner that could potentially qualify for it. It not only allows higher contributions, but it also would exempt you from any UBIT or UDFI taxes. So that's one way to get around it. There are some other, interesting structures that I've seen people make within their accounts to kind of avoid it. But yeah, that's the essence of it. There is a small tax called UBIT or UDFI associated with certain deals, especially where leverage is involved, which is most of the syndication deals that people that we deal with invest in. But it's really not too much to worry about. I wouldn't be too concerned about it, as it's normally a pretty nominal tax and something that's not doesn't affect your returns too heavily.
Got it. A common question I get from pilots is they're currently contributing to their company's 401k. And so can you tell us, can they use that account? Can they not use that account? What are their options? Say I've been at my airline for 10, 15 years. All I've done up until today is just contributed to my company provided 401k. I heard about this IRA thing. What's my next step moving forward? Can I transfer some of those funds, or if I touch any of that 401k, the whole thing is done?
Yeah, no, it's a great question. So it would really be up to your plan administrator, right? And so something that is not absolute. There is always a possibility that you can access those funds if you are still participating in the plan, meaning that you are currently employed and intend to continue to contribute to that plan. There are what they call in-service distributions. So depending on how much time you've been there, whether your 401k is vested, a number of other considerations, you may have access to what they call in-service distributions. So they may allow you to actually roll over a portion of what you've contributed and potentially what they've matched into a vehicle like a self-directed IRA with NewView. But that would be up to the plan administrator. But I would say ask them if they have in-service distributions. Again, it's distributions while you're in service to see if that money is available. If not, then yes, it would only be available once you either change employers or once you retire and have the availability to actually roll over those funds. But in-service distributions are something that's written into some 401k plans and may be available to you. So I would encourage you to talk to your plan administrator and ask them about in-service distributions and whether those are available. And then otherwise, I mean, again, you can get money into these accounts. It's not like a get rich quick thing. You're not putting money into these accounts quickly. It's more of a grow steady over time thing. So the $6,500 a year contributions, I mean, those only get you so far. If you have another IRA that you've been contributing to, again, you can transfer that money over. But I would also say that there are investments that you can make, with just a little bit of money. And as the investment landscape continues to change, the barrier for entry will continue to get lower and more people will have more access to a variety of investments. And so I would encourage people to start contributing if they haven't already to these accounts, and whether or not their money is locked up in a 401k or eligible to be rolled over, to start an account and start investing it, whether it's in the stock market or a more diversified asset like real estate or otherwise, to start and establish this account and start making investments through them.
Cool. Awesome. Thanks. Dominique, sounds like you got a question.
Yes, I have a question. So to kind of piggyback on your question, I know new for the 2024 year, my employer now has the HSA through Fidelity, and I believe that I can use funds to invest in real estate that way. Can you explain what that process looks like? Is it the same process as like in-service distributions? And what are the advantages of using HSA?
Yeah, so the HSA is another individual arrangement, right? So you have the option of opening up an HSA wherever you want. While they offer one through Fidelity, you're not beholden to opening one with Fidelity. You can go to your administrator. You can tell them, hey, I'd like to have my HSA with NewView. You come to us, and just like the process I described before, you would open up an account and establish that HSA. If you have an HSA that you've already been contributing to, you can transfer the funds over or roll them over. And then once you've identified your investment, we would then take you through the appropriate steps to get it done. If it's a real estate syndication, then the process is treated as a private equity investment, and it would go through our private equity team. It's a very simple process. But like I said, it's up to you. It's another individual arrangement that you have pretty much total control over. So if you want your HSA to be with a custodian like NewView, you go back to your administrator and simply tell them that you'd like to open up that HSA and what are the steps to roll over the funds that do exist in there, so I can start investing them.
Thank you.
You're welcome.
As far as the steps for new investors using an IRA, what do you suggest? I know you put the steps there, and it's pretty straightforward, right? As far as the overall view, what makes it easy? I feel like sometimes there's a little bit of clunkiness in between what an investor thinks they should do and like filling out PPMs. Obviously, I always jump on a call and we sort it out together, right?
Sure.
What do you find to be the easiest, smoothest way for them to complete a transaction? Will be putting everyone, so such as yourself and whoever is their custodian with NewView, in one email chain, and that way everybody can sort of chime in when their step is coming into play? Or what do you suggest is the easiest way for one investor to like complete their entire investment?
Yeah, so once we get through the onboarding process, then we do have specialized teams. So whether that's the private equity team that I mentioned, the onboarding team that handles the actual transfer of money into NewView, the billing or deposit team, we do have special teams that would assist with whatever they need. So once the accounts are established, they typically they would come through my team. My team would review applications, get them processed. Once the accounts are open, then again, it's up to the specialized team to provide, their unique service in processing those investments. So, like I mentioned, the real estate syndications that we help your clients with or your investors with, and the people that come through my team, they would go through our private equity team to help them with the actual investment once the account has been onboarded.
Cool. Love it. Dan, you got any questions?
Nothing profound. I guess is there any like when I am gonna do this transaction here in a couple months when I go through the career transition, how does NewView get paid? Is there like a management fee or something once I transfer to you guys for the self-directed IRA?
Yeah, that's a fantastic question. I'm sorry for not touching on it before. Yes, we do charge a management fee or a maintenance fee. It's not a value-based fee, so we're not charging you a percentage of the assets in your account like a financial advisor might. We charge a flat fee. Like I mentioned before, we do our best to make these tools as accessible as possible. And so a couple years ago, we worked to structure our fee schedule that was simple enough, that was affordable enough that didn't sacrifice on service. And so, long answer longer, it's $185 a year to maintain the account. And for that, we do all of the reporting on the account. We do everything to keep you in compliance with the IRS, and then of course consult with you on anything that you need. And then there's a $50 asset holding fee for each investment made on the account. Both of those are yearly fees, so they're paid upon opening the account and then every year thereafter. And just to clarify, that asset holding fee, it's essentially a fee to do the administration on the investment. So most of the investors that we work with, again, are coming in to do syndications. So again, for example, you come in, Dan, you want to do this investment with Satch. We would open up the account. We would like I mentioned, get the funds in and then get everything sent back out to him. But the process itself is fairly easy, fairly streamlined. That investment that you make, that $50, or sorry, that investment into Satch's syndication would be charged $50. That's our asset holding fee. We charge the lifetime of the investments. If that's 4 or 5 years, it's charged for the 4 or 5 years that you're in the investment. Most of our investors that we work with have about 1 to 2 investments in their accounts. They're paying anywhere from $235 to $285 a year.
Okay, and then is there some percentage extra that I should transfer into the self-directed IRA? I was reading that everything associated with the like, so say I go in on an investment with Satch for $100,000. Should I put in additional monies for handling taxes and all that, since it all has to come from the IRA?
Yeah, so the great thing is that the income that you receive from the investment will all come back to the IRA. Everything will continue to be accumulated in the IRA until you hit retirement age. And you don't have to worry about anything until you get to retirement age. So no, there's no percentage that you need to bring over or anything additional. And I would actually, point out that our accounts here at NewView, again, we're a passive custodian. We don't make investments on behalf of our clients, and we have to be set up a certain way to abide by the rules in terms of our charter. So the accounts that we have here, they're just cash accounts. They're undirected cash accounts. So if you move over extra cash, right, which is fine, there's nothing wrong with it. It just sits in a non-interest bearing account. So if you want to bring over extra cash, I would definitely advise you to have a place to put it, and not bring it over unless you intend to invest it. Just because, again, if you bring it over, if you bring anything extra, it's not going to make money, and it's never helpful to just have money sitting there doing nothing for you. So, yeah, I mean, you can, but that would really be a decision that you want to make. But most of the investors that we work with move over just enough to make the investment, until at least they see, how their investments are doing. They can also reinvest the dividends or any other income that they receive into investments pretty quickly and right away. So it's really a matter of your strategy and your philosophy, but you don't have to.
Okay, great.
Might beat putting it on a mattress. Who knows?
Yeah, I was going to say that one thing that is helpful is looking for, some short-term investment options. Like, again, I'm a limited partner in several syndications. When, those syndications divest and I get my money back, I'm looking for new places to invest my money. But between work, my son, and everything else, obviously it takes time to find a new investment. Sometimes it happens to be that the market is just in a downturn and there's no deals going on, and so it takes months to find something new. But I mean, there's other short-term investments. I mean, like, for example, I exited a syndication a couple months ago. There was a new debt fund that came up with a 90-day liquidity period. I was able to put my money in there, let it grow for me at a 12% rate, and get my money back, in 90 days, plus my 12%. So that was good for me and allowed me enough time, enough breathing room to find my next investment. So that's one thing that I might suggest is, yeah, I mean, bringing something over and finding like a short-term investment option that does exist out there. You can even write a note to like a friend if they need a loan for something. I mean, there's so many options within these accounts, and so that's the beauty of it. There's also some burden, of course, is that you have to decide what you want to do with that money. Otherwise, it's not going to do anything for you. But the beauty is that once you've decided what you want to do, the options are really endless.
One question here, because you touched on it, Steve, about retirement age. What is considered retirement age within the IRA space, and are there any fees if you pull the money out sooner? Because I don't know, I sort of see it a little bit. The retirement age that the government has for 401ks to me just doesn't really apply as as much as it does itself, right? Because
Sure.
it's kind of like I don't see myself retiring at 65, right? So you know what I mean? Is there
Yeah.
to start using some of that cash flow, because you will grow that account to say a couple million, and then it's like, well, you get to a point where like, okay, I want to start using some of that money to live off of. When can you do that, and would you pay any fees?
Yeah, so the technical retirement age by the IRS is 59 and a half. And they put it that way to, of course, collect on this tax that has been deferred for years and years that they haven't been able to collect on, right? Many Americans still have their accounts set up the traditional fashion where they're deferring the taxes. But that's the check mark, or the checkpoint rather, for the IRS, right? For you, it means that if you have a Roth, right, it means that now you can start taking distributions, you can do whatever you want. Money's always tax free, but you don't pay a penalty. If you started taking money out before retirement age, you always pay what they call an early withdrawal penalty. So like an early distribution penalty, usually that's 5 to 10% of the money that you're taking out. If you contributed to a Roth with post-tax dollars, meaning that you already paid the tax on the money that you put in, you'll never pay taxes on the money that you take out. But if you take it out before retirement age, you're always paying a penalty on it of 5 to 10%. In a traditional account, again, you've deferred the taxes. So Uncle Sam hasn't gotten paid yet. So 59 and a half then becomes the checkpoint for the IRS to say, okay, now I can start collecting on the money. And they force you to take what they call retired minimum distributions. Now it makes sense. It's the advantages that you get. You could defer the taxes until a later date when you're in a lower tax bracket. And I mean, there's a number of reasons that it makes sense, and it's a fair system, fair enough. But yeah, that's essentially what happens. And then they force you to take these required minimum distributions. You then have to distribute money from the account. And as you distribute money from the account, you pay taxes on the money that you distribute. So retirement age is, again, 59 and a half, defined by the IRS. If you have a Roth account, doesn't really matter to you because you've already paid taxes on the money. If you have a traditional account, it means that you're going to be forced to start taking money out of the account and then paying taxes on that money. Now, what tax rate you're in, or what tax bracket you're in rather, and the rate of taxes that you pay, of course, will vary depending on where you're at in your life. And then Satch, to your point, retirement means something different for all of us. You can contribute to these accounts as long as you make earned income. So earned income from like a W-2 job. You could be 80 years old and working at Walmart, and as long as you have a W-2 and earned income, you can contribute to these accounts. So although 59 and a half is the retirement age, it's more so just a gauge on when the government can start forcing people to start distributing money, so that they can start getting paid. But you can contribute to these accounts pretty much indefinitely as long as you have earned income.
Cool. Love it. Hey guys, we'll wrap it up here in one more minute, 15 past the hour. You guys have any questions? Last minute?
I don't think it so far.
Yeah, I'm all set. Thank you very much.
Awesome. Well, hey guys, thanks for joining us. For the people that watch it on the recorded, I'm sure they will be hitting you with questions, Steve. So can everybody contact you by scanning this QR code? Can you just explain this?
Yeah, absolutely. Satch, again, thank you so much for having me on. Dominique, Dan, and everybody that listened, thank you so much for joining. I know that it takes a lot out of your busy day, but I think that it's important to educate ourselves on what's out there. Again, this self-directed IRA has been transformative for my retirement and the lives of so many of the other people that we've worked with. And so I'm so again, pleased and privileged to be speaking with you guys about what we do. And for anybody that's listening to the recording, again, we are educators by trade. So we're really here to help bring awareness to what we do and help you guys with any questions that you may have about the realm that we're in. So yes, scan the QR code. It'll take you to our page. It'll bring up all the information about NewView, including our contact information, as well as a calendar link. So you can schedule some time to talk to either myself or somebody on my team, and we can answer some more specific questions about how we can help you out. Like I said, the process is easy, but yes, scan that QR code and we'll be happy to chat.
Cool. Awesome. Well, thank you, Steve. Thanks for joining. Thank you, Stan, Dominic. Thanks for hopping on the call.
Thanks, guys.
Thanks much. We'll see you.
Thank you. Thank you.
See you.